Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. How will the recently announced stock split affect the share price? You might be surprised by the answer. In this video we will be analyzing if Chipotle Mexican Grill stock is a buy. Chipotle, stock ticker symbol CMG, has long been a strong company with many changes happening recently. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Chipotle. Chipotle was founded in 1993 by Steve Ells as a pioneer in the fast casual dining concept. Utilizing fresh ingredients with a focus on quality, Chipotle quickly became popular for its customizable burritos, bowls, and tacos. After going public in 2006, the company continued to grow rapidly, overcoming a series of bacterial and viral outbreaks linked to the restaurants that caused the share price to plummet 67%. After implementing stricter food safety protocols, the company quickly regained growth. Today, Chipotle boasts over 2,000 locations and a workforce exceeding 45,000 employees. The company is a member of the esteemed S&P 500 and may be looking to join another storied index after announcing a 50-to-1 stock split, but more on that later. Now let's look at the price action. Starting with the 1-year chart, we see that Chipotle had a CAGR of about 82%. Zooming out to the 5-year chart, we see that Chipotle had a CAGR of 34%. Chipotle share price has been a beautiful grower for a long time. Love it. If we perform a backtest comparison of investing $10,000 in Chipotle versus the S&P 500, we find some great results for Chipotle. In that comparison with the S&P 500, $10,000 invested in Chipotle would have grown to $62,270 or a 42% CAGR versus $22,073 or an 18% CAGR if invested in the S&P 500. This demonstrates tremendous outperformance for Chipotle. A Chipotle investment would have also been more volatile with a 35% standard deviation versus 18% for the S&P 500. Chipotle outperformed the S&P 500 in terms of the best year performance, for which Chipotle actually grew 94% versus S&P 500 31% gain, but lagged on the worst year performance where Chipotle fell 21% versus the S&P 500 18% fall. In terms of max drawdown, Chipotle fell 31%, more than the max drawdown of 24% for the S&P 500 during the 5-year period. Chipotle did outperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Whoa, this is such a great company. Now let's hop over to market share and take a look at Chipotle's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Chipotle is categorized under fast food restaurants. Expanding the fast food restaurants tab, we can see that Chipotle is the 4th largest company in this sub-industry by market share and is growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Chipotle, CMG, and see that the market share is 1.04% out of the publicly traded food, beverage, and restaurant stocks currently in the market, and Chipotle is consistently growing its market share. The 5-year market share CAGR for Chipotle is 7.56%. This means that Chipotle is almost doubling its market share every 9 years. If we start in 2019, we see that the market share was 0.77%, 0.84% in 2020, 0.9% in 2021, 0.94% in 2022. And rose to 1.04% in 2023. In this newest version of market share, all of the companies are already grouped by industry, so we can compare Chipotle to the entire restaurant industry. Here we see that Chipotle takes 6.74% of restaurant revenue and is growing its market share at a 6.41% CAGR. Chipotle is a major player in the restaurant space and is here to stay. Let's take a look at the fundamentals. Gross margin is 41%. This is an excellent margin for a restaurant. Revenue has compounded at around 15% over the past 5 years and has reached over $9.87 billion most recently. Steady revenue growth and great gross margins. It is so good. Looking at cash flow, we see a 25% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 14% CAGR. As a result, free cash flow has grown at a 33% CAGR. Nothing really to say here. Chipotle continues to be a free cash flow juggernaut. Weighted average shares outstanding have fallen over the last 5 years, going from 28.3 million shares in 2019 to 27.7 million shares most recently. Chipotle has been busy buying back shares. This is what investors love to see. Now let's view return on invested capital. Return on invested capital has improved from 12.4% in 2019 to 18.5% in 2023. This is great. Chipotle is consistently getting a little better every year. This company is firing on all cylinders so far. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -4 days in 2019 to -5 days most recently, Chipotle has gotten even more efficient over time. When I saw the negative cash conversion cycle value, I legit made this face and said these exact words. Dude, I love this company. Last, let's look at Chipotle's debt. The net debt to EBITDA has fallen over the past 5 years, going from 2.8 in 2019 to 1.4 most recently. This is just great. They are leveraging leverage and getting great return on the investment. Again, love it. The fundamentals of Chipotle are so good, bro. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Chipotle. It is a restaurant company with a gross margin of 41%. The 5-year revenue per share CAGR is 15% and the 5-year free cash flow per share CAGR is 34%. Oh, so good. A return on invested capital of 19% is good and is getting even better. Next, the cash conversion cycle of -5 days is wonderful. Concerning debt, a net debt to EBITDA of 1.4 means that Chipotle can pay off its debt with less than 18 months of earnings. This is such a solid company. Now let's switch our attention over to valuation. Chipotle is overvalued relative to the S&P 500 with a ratio of 2.3. The price to earnings growth, or PEG ratio, is 2.7, indicating that Chipotle is overvalued relative to their projected earnings growth. Chipotle continues to grow at a healthy pace. It is taking market share from other restaurants and is efficiently converting that revenue into piles and piles of free cash flow. Though the valuation metrics are high, investors do pay a premium for great companies. Kudos to the amazing management team. As noted earlier, Chipotle will be undergoing a 50-to-1 stock split. This means that investors holding a single share of Chipotle stock at a share price of $2,797.56 today will have it converted to 50 shares worth $55.95 each. To be clear, this is not a dilution event. For company insiders, I expect the stock split will allow easier and more frequent selling without causing massive shifts in the share price. For other investors, options will be cheaper and more accessible, which I think will lead to a bit more volatility for the share price and could spark the market cap reaching new all-time highs. Helping this could also be the potential addition of Chipotle to the Dow Jones Industrial Average, which usually drives large buys of the underlying stocks. Chipotle is the best company I have covered on this channel. I have not been able to find a better growing, more efficient, free cash flow positive company yet, and I think it may be a while before one replaces Chipotle in my opinion. Valuation, then, is the next big hurdle, and I do think the company is a bit expensive. I would love to see a pullback, but great companies often require premiums to buy. For me, Chipotle is definitely going on the watch list. Many thanks for watching. What do you think about Chipotle and how awesome they are? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.